Welcome back to another episode of Stock Review at Ang's channel. So today we'll be looking at another 2000 Russell 2000 stocks, which is HIMS and HERS Health, called HIMS. So let's get right into it. Welcome back everybody. Today we'll have the HIMS, which I do think that most of you will heard of it because of how popular the movement of this stock is and how aggressive. So back in the January 2025, right, we have a surge upwards of almost 2x of the amount, and during the tariff war we have a retracement or pullback back to the previous level of the January, and then continue to surge back almost the all-time high over there, but right now is still somewhat in a uptrend for these stocks. Without further ado, let's jump right into their financial status and also look into what they actually do and their source of income. So over here we have the revenue for HIMS and HERS, and we can actually see their revenue for the quarterly is actually quite significant. As you can see, it's a very clear uptrend with exponential formats. This is indicating that they have great revenues overall and great sales. So it's very predictable due to its history of growth since the year of 2020. And as for the net income for the HIMS and HERS, they are slightly positive for only for the recent quarters, and for the past few years from 2020 until the year of last quarter for the 2023, only then they start to have profitable, and only then they start to have increasing net income. But recent quarters just showing the strength of the net income slightly to lose its power. This might be a concern because I would like to personally see a constantly growing net income, just like how they react in terms of their revenue. Their revenue is pretty solid, pretty good, but the net income is kind of like they are just starting out to become a positive trend. So maybe in the next 5 or 10 quarters, it will have increasing net income in the format of exponential form as well. But we will be seeing that afterwards or in the later futures. But for now, in my opinion, the stocks are currently sitting at a position whereby they are starts to become profitable. It takes time for them to actually build this profile, which is very predictable with increasing net income at the same time. So moving on, we have the free cash flow from HIMS and HERS. So the free cash flow is very decent for previous years. For starting from 2019, 2022, starting at 2023, this is where they have positive free cash flow. This shows a great signs showing that hey, this company is starts to generate more cash flow than previous years because of what I mentioned, because they started to become profitable in recent quarters. In the next future years, maybe 5 to 10 years down the road, if the model is being able to create all-time highs of the free cash flow, indicating that the model of the business model of this company is actually quite good, showing that the strength of it generating more cash and generating more net income. So this is the two things that I would like to observe, which is the net income to take maybe few or 4 quarters more in order for it to build up its profile with increasing and more predictable net income, as well as for the free cash flow to have a continuously growth, showing a predictable sign with a strong growth for this company. And lastly is going to be their R&D expenses, and this also show a sign of increasing R&D expenses quarterly, indicating they are actually putting more money into creating new medicines or creating new methods in order to deal with the medical situation of their customers as well as their patients. So after looking at the financial status, my take is that the company is actually in the states whereby it's actually very solid. However, it still maybe takes 1 year or 2 or maybe 4 to 8 quarters in order to build its profile. For example, the net income, what I expect for the future quarters is that they will continuously generating more net incomes in the future quarters, showing a increasing trend of net income, which is more predictable compared to their current status. And they are in the states whereby they start to become profitable, and this is showing a sign of the growth and the strength of this company in this competitive US market. So right now, let's look at what HIMS and HERS Health actually provides and what is their source of income. They are actually telehealth or online pharmacy company. They actually include a lot of areas such as the mental health, sexual health, primary care, as well as weight management. What they do is actually they have telehealth consultations whereby provide healthcare by the licensed healthcare providers through digital platforms. For the prescription wise, they will be having them being shipped regularly via affiliated or partner pharmacies driven by the subscription plan. So the basic idea is that they have this platform, digital platform, whereby they have licensed healthcare provider to give suggestion to help you look through your condition on what disease or what condition that you are at, and provide prescription, and that prescriptions that is being delivered or shipped by their partnered pharmacies, so forming a in-house medical care which ease the process of without having the people to actually go to the hospital or to a certain place in order to seek for medical support. So this is very thoughtful, as some people might staying alone or they don't have any spouses or families. So this is a best option for them to actually seek help online and being able to access to the prescriptions or the medicine without going out to expose the disease to the public as well. Besides, they also have the weight loss program whereby they actually launch a oral medication kits in 2023, adding some injection called the GLP-1. They have also attract more customers, more new customers with personalized dosing as well. So they provide weight loss programs helping you to have a step-by-step planning to help you lose your weight targets and make everyone healthy by staying at home through their digital platform. So it's very thoughtful as well. Lastly, it's going to be the technology and diagnostics. So tools like their AI power, right? As because they also use digital platforms to help the customers with their medical conditions through licensed provider. They also provide tools such as the AI powered match systems, guide treatment personalizations, and also like to support in-house diagnostics and pharmaceutical capabilities. After looking at what they actually do, let us look at which part of it actually provide a wider or their revenue streams. One of them is going to be the subscription-based care, whereby this is the backbone of their company revenue, accounting for over 90% of the total income. So this is the subscription-based care. What they do is actually customers typically pay monthly fees, $73 on average. That's quite expensive actually, for virtual consultations and recurring deliveries such as for the medicines of shipping or the pharmaceutical medicines, and prescriptions and non-prescription sales, which alongside the subscriptions. So earn from one-time OTC sales such as their skincare, their products, and including hair loss shampoo sold via its online and retail channels. So they have their prescription stores, which they actually partner with their local pharmaceuticals, and the product will then sold and delivered by that pharmaceuticals, and they earn from the shares as well. Lastly, it's going to be their weight loss treatments, which compounded the injection as we mentioned. So that actually generates nearly 200 millions in terms of revenue. And for 2025, which is this year, they actually projects weight loss vertical revenues around 700 million. So they are seeing growth in terms of their weight loss treatment services, as they actually forecast that hey, people are actually needing more of these treatments and to become healthier and live the lifestyle of being overweight, and because it's very high risk in terms of life, you can have stroke as well. So the summary of the business type is that they actually provide a form of digital healthcare suggestion and also giving the virtual consultations through subscription plan or payments through monthly payments. This is actually very useful, especially for those people who doesn't actually have that time to travel from their home to hospital or to clinics, which can take up to like maybe 30 or 40 or even worse, more than an hour, especially in those city areas, right? So this actually provides them a more flexible time, as well as online pharmacy, allowing them to purchase the prescriptions that their consultants actually suggest them to take on, and they will actually have that product being shipped to their home without them actually having to go to the pharmacy or the clinic and have to find parkings at the same time, which actually costs a lot of time. This actually free a lot of people's time, making them more flexible and people will actually say that, hey, I have no time to go to doctor for a consultation, it's a waste of time. But right now you don't have the reasons to actually say that, because this services actually provide what you have for to provide a flexibility and more time-free management. And also pharmaceutical of online shipping is actually pretty thoughtful, because that is the way whereby you can actually allow the users to better browse through what the medicine they actually needs in order to deal with their conditions. Their primary revenue is actually the subscriptions fee, and additional one is going to be the prescriptions delivery through their online retail stores, which they actually partner with the local pharmaceutical stores. The other one is going to be their weight loss services, which they actually are very confident about the product servicing as well as the sales. This year, they actually estimate a 3 times more of a net income compared to 2024, which is previous year. We will see whether or not if they manage to achieve that goal, and if so, this company do have a strong growth and do have a very decent product, which actually most of the people are willing to pay for these weight loss services. Right now, we're looking at their strengths and weaknesses from the business point of view. The strength is actually their recurring subscription revenue. They have over 90% of the revenue actually comes from the subscriptions, and create a stable and predictable free cash flow, or as well as the customer retention. The mentioning of this recurring subscription revenue is a strong positive advantage, because of people are actually willing to continuously give that monthly subscriptions to the company in order to have regular consultations with licensed healthcare provider to ensure that health is being in a stable conditions. So people are actually, they are more thoughtful for themselves and willing to pay that amount of money, which is $73 per month. However, I do see one weakness is that the company actually highly rely on the subscription revenue, which, although they mention they have recurring subscriptions from their consumers, what if something really happen and other companies actually provide a better subscription plan compared to them, so people will actually switch immediately of the plan to that company, so they will actually lose 90% of this revenue if people are deciding, hey, they are cheaper, I'm going to switch my plans, so they are going to lose overall their revenue. And they have this high growth rate, which they actually have 69% year on year in 2024, as well as their weight loss treatment services, which they actually have very high expectations in this 2025. And they also have diversified healthcare offering, whereby they cover most of the healthcare conditions such as mental health, sexual wellness, their weight management, as well as primary care. So they reduce the dependency on any category and increase lifetime value per customers. So basically, they focus more of a general medical conditions and provide whatever the customers need or common needs of their consumers, without just focusing on such as mental health only or just weight management, which can be very vulnerable in this very competitive market. And fourth is going to be the strong direct to customers brand. So this is more like a B2C business, whereby you can actually observe their sales, observe the condition of the market of this company by looking at how much of the subscriptions per month or every quarter they will have a report of the revenue segments, whereby how well or how much growth is from the subscription revenue parts, which indicates the strength of the consumer spendings towards this company. It especially resonates with the digital and stigma-free affordable approach to healthcare, which related to millennials and Gen Z. Scalable tech platform, which they actually leverage virtual platforms and digital platforms, right? And also with tools such as AI in order to customize their treatment plan, as well as to expand quickly without building a physical clinics, which actually saves up a lot from the point of view of rental, renovation, as well as humans workers in that clinic, which reduce their operating costs as well as increase profit margin. They also have this vertical integration, as they owns a compounding pharmacy and acquired a diagnostic lab, and reduce reliance on third-party control costs, quality, and speeds up innovations. So basically, they have their own lab to create pharmacies. And for this vertical integration view, right, they also covered up from giving consultation and is online, meaning that they can actually scale it as big as they want, and also provide medical products which they actually partner with their local retail stores. And they also have this pharmaceutical lab, and also to reduce the reliance on third party to have their own innovations on a better medicine, such as their weight loss injection, which has been a services for their consumers. They also have the first mover advantage in terms of telehealth, which is one of the direct to customers platforms to offer a compounded GLP-1 injections for the weight loss scale. So they actually attracts a lot of new customers, especially when they want to, or they are looking forward to have a weight loss plan, which they actually provide. Moving on to the weaknesses, right, we have the regulatory risk, whereby they offers prescription drugs, including the compounded semaglutide, which face the FDA scrutiny, and also have sudden regulation changes could affect a large revenue streams. So this will be affecting by whether or not it will have ethical issues, whereby certain regulation can maybe change the fact or the way they provide their services, the restriction towards certain drugs, which could largely affect their revenue streams. However, for now, that is just some risk that the company will face in the future when it comes lah. Second one is going to be the low product differentiation. So they actually sells common generic medication and that competitors can easily offer, and also face competitions from like Amazon, traditional pharmacies, which provide basics medicine or medications that the prescriptions that they actually provide the prescription for their user. However, the strength is actually the injection for the weight loss treatments, whereby most of the retail pharmacies or their competitors does not have. And thirdly is going to be their heavy dependency on marketing, because they actually acquire customers from aggressive digital advertising, because they operate a virtual shop, whereby it is actually important for them to have marketing to let everyone know that, hey, we have this digital platform which provides a healthcare consultation. We also provide a online stores for you to purchase your prescriptions, your medications, and ship it to your home. Because without a physical locations signifying the strengths of this company, signifying the name of HIMS and HERS at a spot, it's actually quite hard for people to remember or to use or to recognize or to be introduced to that services. And fourth is going to be the reputation and trust, because being a online or virtual company, right, can actually raise skepticism among older consumers or regulators, because most of the older people, right, they prefer, hey, if online services can be a scam, so don't buy this kind of subscriptions, don't trust all those licensed healthcare provider, which they actually say tell you what to do because it's not real. They didn't dare to show you their body, they didn't dare to tell you their location, so it must be a scam. So this is just our older generation mindsets, as well as they have the missteps could damage the trust, which is the shipping errors or poor medical oversights. Fifth is going to be the execution risk in weight loss vertical. This drug supply and pricing issues could limit growth, and the brand name like other suppliers, dominance compounder version may fall out of favor. And they also have profitability still new, which I mentioned and observed from the net income, whereby they just only starts to have positive net income for the recent quarters and requires more future quarters of observation in order to see whether or not they will be able to maintain and continuously growing and creating higher net income in the future quarters, showing a growth as well as its predictability. And finally, it's going to be the limited global presence, as it only focuses on the US market right now. So after looking at what they are doing, what's their strengths and weaknesses, let us back to the ratios and continue to look at the growth of this company. So first we have the debt equity ratio, sitting at the range of 0.1, less than 1, so it's pretty solid. And moving on, we have the ROE staying above a very decent value above 15%, which is 36%, and only for the recent years or the previous years they just starts to have growing and positive ROE. So I would like to see whether or not 2025 they will be able to have a higher ROE and positive ROIC with a quarterly increasing growth of net income as well as for the free cash flow as well. For the ROIC, they almost barely reached the 15% level. However, it's still considered as a very strong company with a good ROIC right now. It's just that right now it's still that we need to observe and wait for a more better patterns, growing trends of a net income. So finally, we'll be looking at the net cash, and from the observations of our free cash flow, right, it's actually quite positive. So it's actually quite expected that their net cash is in the positive form, whereby they have more cash compared to their debt, signifying a strength of a company being safe and does not have to deal with debt issues as well. So overall, this company actually shows a pretty decent trend in terms of financial status, and also starts to have new possibility in terms of only start to getting profitable, and in the long run we would like to see a continuous growth, continuous profitable margin, being able to provide that special service that which is of digital platform, provide virtual consultations as well as their shipments of the prescriptions, and also to provide a more wider range of services including this weight loss treatment services which organization does not provide, and hoping to see that this year 2025 they will be able to reach their expectation of the sales in terms of their weight loss treatments. It's a very decent company with solid fundamentals in terms of financials, and starts to showing profitability in terms of net income, as well as the business model is actually quite strong. So over here we have the economic scoring for HIMS and HERS Health, and right now we can actually see they have the brand loyalty and pricing power, right? Because it's a direct to customer model. They have strong brand among wellness focused consumers, but the pricing limited by the competitive telehealth and pharma markets. So this branding and loyal pricing power is scored at 6, which is not that high. And for the high barriers to entry, there actually needs like pattern for platforms and vertical integrations in compounding their telehealth infrastructures, and also create some barriers, but rivals can replicate in many areas. So the scoring is actually at 6. Switching cost is not actually high because it's not hugely difficult. Leaving can disrupt continuity, but then it's like switching costs to switch to another services is not that high because the monthly average price of the subscription is actually $73 per month, which you can actually cancel at any time. And if you find, as I mentioned, have better and cheaper options, people will start switching to that direction. So the switching cost is sitting at 5. This is also because that they actually have these prescriptions providing, right? They also provide common medication because there are so much common disease that people are actually facing right now, and they can actually buy different medications from their retail pharmacies without actually approaching HIMS and HER companies which provides the same product, but were to accept different services such as their weight loss treatment management, it is actually best, or they have the advantage in this field. And for the network effect, they do have a strong subscription base but lack of classic network viral loop, so they actually score at 5. For the economic scale, they have positive free cash flow. However, they are still smaller compared to like larger pharmaceutical giants such as the United Health, the Novo Nordisk. So the scale is actually at 6. Finally, we have the score of 5.6, which somewhat considered as moderate, but I would say it's a narrow mode. And over here we do have the insights and analysis from GuruFocus, which scoring it at 4/10, which that HIMS has a narrow mode. And also for the alpha spread, they also mentioned that HIMS have a narrow mode, attributing that mainly to brand identity rather than durable competitive barriers. So the only thing that they stands out the most is going to be their weight loss treatment services. However, this is just being that just recent innovations which they have high expectation during this year, which is 2025, and we'll be able to see whether or not if the growth is significant and is observable, then we'll be able to decide whether HIMS and HERS have that strength and competitive advantage in these markets. So overall, my take on this stock is that this company is actually a very attractive one, but investment wise, it's just that this company is sitting at the condition whereby their strength and their economic mode is not really strong, because the economic mode of being at 5, being at that moderate or narrow mode is very dangerous for me to invest, because I would like to purchase stocks or company that have wide modes with also very mature and growing and predictable financial fundamentals. For HIMS and HERS, the financial fundamentals is actually quite solid as it starts to show a increasing trend. However, it do require future, maybe few more quarters in order to observe whether or not their net income will be in the form of increasing and predictable. And in the long run, we'll be able to see this company to grow further more and become one of the large pharmaceutical giants compared to like United Health, Novo Nordisk, and so on and so forth. So their business of providing virtual digital platforms, providing virtual consultations, pharmaceutical treatments, their weight loss treatment plan, which is actually quite thoughtful in terms of allowing people to have treatments while staying at home, especially benefits for those people who are living alone without any spouse, and they are hard in terms of moving from one spot to another, allowing them to have better treatments as well as services from their company. So my take to this company is that I will wait for future quarters in order to observe how well they are able to stable their growth and showing sign of increasing ROE, ROIC even more, as well as their net income, making it even more predictable in terms of their strengths as well as their business model. Although they do face certain challenges such as large competitive market, I do see potentials in them because of their very special way of providing their service for the consumers by taking on in terms of virtual digital platforms. However, there are still many challenges that they need to face, especially for those people who don't actually like virtual consultation, as they prefer a more physical interaction approach which provide a more robust or more trustworthy process. So for me personally, I would not buying these stocks as well, because I would actually wait for few more quarters to observe future financial fundamentals, as well as the stock is actually quite expensive right now because it's sitting at almost the all-time high, and I will likely to buy at the cheap. For example, another 50% discount buying at the $20 range would be ideal for me. And if you do interested in this stock, right, you can actually go deeper to observe their business model and to see whether or not, hey, if this suits your portfolio, and make your own decisions on it. So I guess that is all for today's video. So if you like this video and actually really gain some knowledge and information from this video, do support me by liking the videos, by clicking a thumbs up, share this video, subscribe to my YouTube channels, and yeah, I guess that's all for it. I'll see you on the next one. Bye.